Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 24th, 2025, we're putting the spotlight on the highly volatile GBPUSD pair, often referred to as cable. We'll be diving deep into both the latest news and crucial chart data to uncover what's truly driving this currency pair. The overarching narrative from recent reports points to significant instability, primarily fueled by diverging monetary policies between the Bank of England and the Federal Reserve. Just last week, GBPUSD saw major volatility following interest rate decisions from both central banks, with the Federal Reserve adopting a less dovish, somewhat hawkish stance, and the Bank of England showing a cautious, dovish tilt with votes for a rate cut. Fed Chair Jerome Powell's recent comments flagging stretched equity valuations and his careful approach to easing have certainly bolstered the US dollar. Conversely, weak UK economic data, including a cooling composite PMI, coupled with the Bow's dovish remarks from Governor Andrew Bailey, have weighed heavily on the British pound. Reports today indicate a sharp weakening, with GBPUSD slipping towards 1.3435, marking its lowest level in over 2 weeks. This downturn is attributed to sellers gaining control after the pair failed to hold above its 21-day simple moving average at 1.3521 and subsequently broke below the 50-day SMA at 1.3470. Looking back a few days, GBPUSD did manage a rebound on Monday, September 22nd, as the dollar softened, but UK economic risks are clearly limiting any sustained upside. Crucial upcoming events this week include speeches from both Governor Bailey and Chief Economist Hugh Pill, alongside the release of S&P Global Flash PMIs on Tuesday, which could further impact market sentiment. U.S. political concerns, like the September 30th deadline for a government funding bill, also add a layer of uncertainty. Now, let's turn our attention to the charts, starting with the one-day time frame to get a broader perspective. Over the past few months, we've seen GBPUSD generally trending upwards, hitting a significant 2-month peak of 1.3726 on September 17, 2025. This aligns perfectly with the news reports discussing a peak last week before the recent declines. After reaching that high, the pair saw a sharp reversal, with consecutive bearish candles on September 18th and 19th, dropping from around 1.3726 to 1.3471. However, if we look closely at the candles for September 22nd and 23rd, we observe a slight rebound, closing at 1.35136 and 1.35235 respectively, signaling some buying pressure or profit-taking from short positions. This short-term rebound on Monday aligns with the news indicating the pound found some footing as the dollar weakened. However, the news reports for today, September 24th, suggest that this rebound was short-lived, with price already breaking down significantly from these levels. The resistance at 1.3521, which is the 21-day SMA mentioned in our news, appears to be a crucial level that the price struggled to maintain. Let's zoom into the 15-minute chart to get a clearer picture of the immediate price action leading into today's news. Focusing on the latter half of September 23rd, we can see the price consolidating mostly between 1.351 and 1.3525, showing some stability after the previous daily gains. The final candles on September 23rd show the price holding relatively steady around the 1.352 level. However, as we discussed, today's news indicates a significant move downwards, breaking through key technical levels. The reported drop to 1.3435 would mean a sharp bearish gap down or a rapid sell-off in early trading on September 24th, pushing it well below this recent consolidation range. This immediate plunge seen in the news strongly correlates with the strengthening US dollar index hitting 97.70 and the Fed's cautious stance. For traders, the failure to sustain above the 21-day SMA at 1.3521 and the break below the 50-day SMA at 1.3470 are strong bearish signals. The current reported price of 1.3435 positions the pair squarely beneath both of these critical moving averages, reinforcing the bearish sentiment. In the short term, if the selling pressure continues, The immediate support level to watch is 1.3400. A break below 1.3400 would likely open the path to the September 3rd swing low at 1.3332, potentially confirming a more pronounced downtrend, as some analysts predict a drop to 1.30 to 1.32 into Q4 if the 1.34 handle breaks. For a bullish reversal, GBPUSD would need to reclaim the 1.3470 level, the 50-day SMA, and ideally close above the 1.3500 mark. A significant push above last Friday's high of 1.3559 could signal a strong bullish engulfing pattern, but current market sentiment makes this less likely in the immediate term. The overall trend, influenced by policy divergence and UK economic fragility, suggests further downside risks for GBPUSD in the short to medium term. Long-term, resilience in US data versus cooling UK growth will keep the pressure on the pound. Traders should monitor BOE and Fed speeches closely, as any shifts in tone could trigger sharp reactions. The US funding bill deadline on September 30th is another event that could add to volatility if not resolved smoothly. To recap, the important price levels to watch are the immediate support at 1.3400, followed by 1.3332, which is the September 3rd swing low. On the upside, key resistance levels are at 1.3470, the 50-day SMA, and then 1.3521, the 21-day SMA, which now acts as strong overhead resistance. A break below 1.3400 has a high likelihood, perhaps 70%, especially with persistent dollar strength and no positive UK news, which would reinforce a move towards 1.3332. Conversely, a strong rebound above 1.3521, perhaps a 30% likelihood in the very short term, would require a significant positive catalyst from the UK or a sudden dovish shift from the Fed. Always look for confirming candlestick patterns and increased volume around these levels when deciding your trades. Remember, market conditions can change rapidly, so staying informed and agile is crucial. That's all for today's in-depth analysis of GBPUSD on Explain the Charts. Don't forget to like, subscribe, and hit that notification bell for more insights. Happy trading, and we'll see you in the next video.